Good morning, everybody. I believe we've got quite a few people in already, but there's a few more to come. So we're just going to wait a few more minutes before we crack on. Right, okay, let's start, shall we? Hang on, we've got one more person still to admit. I don't know why that's not working. Oh, hang on. Sorry about that. Okay, right, let's get going then. Welcome to this latest briefing from us. We are going to be looking today at obtaining authorisation in the UK. I think before we go on, a lot of this is about firms that are in the TPR, firms that are EU firms trying to get into the UK, get authorisation here after Brexit. 90% of what we will be looking at today will still be applicable to those who are simply looking for authorisation because they and are not in the TPR. And I think actually, as I make the point later on, that there were quite a few firms who didn't get themselves into the TPR in time, and they have to go through the whole process anyway. First things first, please. Could you go side-by-side view if you haven't already? Could you please turn cameras and microphones off? We will this week be polling everybody. The answers to the polls are completely anonymous, so don't worry about that. If you have any questions, nobody's asked any yet, thankfully, can you use the chat facility and we will cover all of the questions at the end of the session. And finally, we record all of our briefings. Afterwards, we then, may I say, we put them up on our website, but only after Ben has done a bit of editing of my blunders. It will be on the website later on. Normally, I think there's an email that comes out, and there's a link to the website and/or to YouTube where we keep all of these things. Right. So let's start with a question. Have you started the process of requesting authorisation for your UK business? If you could, you should now have the ability to fill that poll in. We're going to just wait for a few minutes while we see. We've got a third of people, half of people have answered, 60%, there's still a few more to come. Interesting, very interesting. Okay. We've still got a few more to come. If you haven't, could you please complete the poll? You don't have to, obviously, but it's always good if we get the more the merrier. We're at 75% now. We'll give it 20 seconds. Okay. 5 seconds. If you're going to do it, let's go. A few more haven't. Final answers. Okay, Ben, let's put the results up, please. Look at that. So we've got 42% of people have already put in an application for their authorisation. I'm actually surprised by that. I think that's quite high at this stage, although we are in May. Anyway, that's good. Thank you very much. Very interesting. For the rest of you, this is, I guess, the seminar or the briefing that we've got. So let's move on now, if we can. What's going on? Slides. Okay, right. So what's happening? So Brexit came along. There was a cliff face, and there was going to be a great deal of upset in the market. Policyholders might have had problems, and there could have been a real issue for the financial services market. So the government stepped in, the regulators have stepped in, and they've created what's called the TPR, the Temporary Permissions Regime, primarily to minimise the impact of Brexit for the moment. Most importantly, of course, it's temporary, right? So it's going to last 3 years, which was from the 1st of January this year. And in the interim, between now and then, those firms that want to continue trading in the UK are going to need to be fully authorised. That is a lot of firms. So there are already 1,500 firms in the TPR which are brokers or MGAs, and there's a few less than that in the way of insurers. There are also, of course, firms that didn't get themselves into the TPR because they ran out of time, and there are firms that are carrying on needing to be authorised, whether they're already trading as ARs or whatever the case may be. So the authorisations department is at the moment very busy. Now, firms that are in Europe and want to be in the UK have a choice. They can either be, they can set up a UK subsidiary, or they can operate a branch, but you have to be one or the other at the end of the TPR. Probably the most significant majority are going to go down the branch route. And the reason for that is that the EIOPA and the EU have put in place an attempt at protectionism, I guess you could call it, by which any distribution activities relating to insurance must be conducted by a firm that has EU authorisation. So any EU risks must be handled by a firm with EU authorisation. The consequence is, if you want to place EU risks in the London market, you're going to have a firm that has EU authorisation. So it has to be a branch of an EU firm. So that's why most firms are going to go down that route. Now, the most important part of this is that when you are applying for authorisation, you are not applying for authorisation for that branch. You are applying for authorisation for the firm of which the branch is a part. And that is going to drive a large part of the application process and the issues that have to be looked at, and the approach that both the PRA and the FCA are going to take, because they're not interested just in what the branch is doing. They want to know what's happening in the legal entity that they are going to be regulating. And it also drives, of course, some of the big issues. Let's move on. How confident are you that you'll be able to complete the authorisation process in time? Ben, can we get the poll up, please? We're going to give it a minute. So if you could all have a go at it. $20 seconds. We've got a few left to complete. $10 seconds. Anybody else going to do this? Okay, Ben, share, please. So that's rather interesting to me, because a lot of people said they'd got on with their applications. I think it was 40-odd%. And now actually what we're seeing is that they've started, but they haven't filed yet. So that's quite an interesting dynamic. And a very few number have filed their applications. So, there is quite a lot to be done. And as we'll see as we go on, I think most firms should be able to do it in the 2.5 years that are remaining. One would hope that we can, but we are seeing that the FCA is having some difficulty in its authorisations department at the moment. That should be fixed before the end of the TPR. One would certainly hope so. And as we'll see, the process is not so quick. Okay, so the application process itself. Most of you, I hope, will know that intermediaries are regulated in this country by the FCA, so that is brokers and MGAs, and insurers are regulated by the FCA and PRA. If you're an insurer, you need to apply to the PRA and the FCA. If you're an intermediary, you just apply to the FCA. If you are an insurer and you have dual authorisation, your application for both FCA and PRA will go to the PRA, who will coordinate the process with the FCA. So how long will it take? Well, or even when do you start? The timing is absolutely dependent on the scale of the firm. All of the big firms are being given something called a landing slot. Some of the medium, some of the upper-sized, mid-sized firms are going to get landing slots as well. The smaller firms are basically being told to get on with it. So we've got different firms in that whole sort of scale. Our smaller firms, we've been told, should just be getting on with their application. They want to try and get the smaller firms in and dealt with before they get to the really big firms. Although the regulators recognize that there will be a series of smaller firms later on. Some don't have and haven't scheduled their application process yet. They haven't started their planning, as we saw, and it means that they're not going to get that in. The problem for firms is, the smaller firms is, you're not going to necessarily get the sort of attention that you would like and get the speed of response from the regulators if those regulators are deep in the mire of dealing with some of the really big firms. So you want to think about that. Regulators are saying, please get on with it if you can. Okay, so applications, they are extensive and they require a formal application to the applicable regulator. They require applications for each individual who is subject to the SMCR, so that's completely separate application forms. There's potentially a large suite of documentation as well. So insurers, you can expect maybe 20 to 50 documents additional to the application forms themselves. And that will involve things like CVs, it'll involve your statements of responsibilities. Those will be required for firms as well. A whole series of documentation on governance, et cetera, et cetera. The key document, right, is the regulatory business plan. The PRA and the FCA give you a bit of idea about what that has. What we've done in the appendix to these slides, so you'll have access to them afterwards, is set out what should be in a regulatory business plan. And we've given a bit of a sort of summary of the information which is going to be expected. And it's not, there's no sort of format that you have to follow. There are areas that you have to cover. And what we've done, they're not in any particular, I think I've tried to keep them in a logical order, but there's no particular order. You just need to cover the topics. And we have provided you with some details of most of those. Obviously, if having read that, you want to ask us some questions, we're very happy to talk about it. So the regulators, what's going on? Okay, so the regulators, they are regulators who look at the risks. So they've got statutory objectives. Those statutory objectives are generally the protection of financial markets and policyholders. And they look at it from the point of view of, what does your firm present as a risk to their objectives? Okay, so as we go through all of this, the question is always going to be, what is the risk? How is the firm mitigating it? When you're putting your regulatory business plan together and providing them with the information that you're going to need to give them, you want to be thinking about, how does this ensure that we are meeting their needs to evidence that we are not a significant risk to their statutory objectives, that is, to the policyholders or to the financial markets. Okay, so that's the underlying thing that you need to think about, is that. Of course, for those who are our friends in Europe, we've got quite a few people here from Eastern Europe today. We've got people from Malta, Ireland, and a few other areas. The PRA is the prudential regulator. The FCA is the conduct regulator. They do have a different way they look at things, and you have to cover both in your regulatory business plan, as well as do the documentation for each. Okay, so the regulator's looking at your risks to them, to the market, to the policyholders, and how you are mitigating those. All right. Firms that are in the EU, because the regulators in the UK are going to be regulating your legal entity that is going to be originally authorised in wherever it may be. It might be Malta, it might be Ireland, it might be Italy, it might be Spain. because they are, the UK regulator is also going to be regulating that firm, it presents a greater risk to the UK regulators. And the key reasons for that are here. It can be more difficult for a UK regulator to enforce its rules or protect policyholders or the market if you are based in a different country. It's as simple as that. Also, the UK rules may differ to those of the home state. So there's this conflict of interest that can arise. You also have the potential that the liquidation rules, the insolvency rules in whichever country that legal entity is based, differ from the rules here, so that the protections that may work here, such as cash account rules, which require trust accounts for client monies, so premiums and claims monies, that may not protect that firm. So these are additional risks that the UK regulators have to look quite closely at when they are looking at an application from a firm which is already based somewhere else. Okay, so the FCA has categorized the harms that it looks at. It has decided that there is retail harm, client asset harm, and wholesale harm. Now, retail harm is the highest risk to them because they are a conduct regulator. They are concerned about the nature of the products, the way they are distributed, and whether or not they give rise to significant risks. What the FCA wants to see is that as much as possible, firms will, or policyholders will be able to gain the protection of the Financial Services Compensation Scheme, which provides compensation to policyholders in the event that an insurance firm fails, whether that's broker or insurer. Client asset harm, that's about your client assets, that's premium and claims monies that you're holding on behalf of your clients. Smaller firms, obviously, smaller risk, less customers, etc. The larger the firm gets, the higher that risk becomes. And then you've got wholesale harm. Wholesale harm is about how you present a risk to the market as a whole. And that really does primarily deal with your really large firms, the big broking firms. But they are the risks that you have to be able to deal with in your application. Okay. Right. So, risks of harm. We've talked about how the regulators will look at it. Again, what you're going to get is the regulators here are wanting to look at how they coordinate and cooperate with the home state regulators. So that's a key piece for them is, if there's a problem with the firm that's applying, are we going to have the cooperation of your home state regulator? Now, in many cases, they have MOUs, which are Memorandum of Understandings, which allows them to share information. And as we'll see later on, that will also be a part of the application process. They will ask for and undertake a bit of investigation into the for the firm by contacting the home state regulator. The secondary one is that the smaller the firm in Europe. So if you are a UK-based firm and you have set up a small firm, a small legal entity in Europe, in order to then be able to bring your European risks back into London through a branch, the fact that you have a small legal entity is going to pose a risk to the FCA and the PRA. All right, primarily I think FCA, because ordinarily a branch is not expected to be larger than the head office. And a lot of what the firms are looking at is the regulators are looking at is how is the firm being regulated by its home state regulator. Okay, so if you're in, a tax haven or something like that, you have a very small operation there, and you're going to have a large branch here, that's going to pose a risk to the UK FCA or to the PRA. So it is a dynamic that has to be dealt with. Retail risk, we talked about retail risk during the last slide. If you are selling products to UK policyholders, most people in TPR are there because they were in the EU and they're dealing with EU risks. But if you're intending to also use your UK branch to sell products to UK policyholders, you are increasing your risk. You are increasing the risk to the FCA and the PRA. So if at all possible, if you are, for example, a UK firm that has set up something in the EU in order to bring your EU risks into the UK, don't use your branch for UK risks, if that's possible. If you have a legal entity here, trade your UK risks through that legal entity, because that reduces the risk to the FCA and PRA. And it may also, although we don't give tax advice, it may also help you with, double taxation and things like that. Finally, if you're applying here, you can expect that you are going to have to look at facing higher scrutiny for UK products. Okay, I think I've already covered that, but it's a retail UK risk is going to present a higher risk to the regulators in the same way that any other UK risk would. Right. So I've said that the FCA and PRA start from the point of view of what are the risks. Well, they also want to look at what mitigations. And I said it earlier on, your regulatory plan has to be presented as a way of establishing for the FCA and for the PRA that you have in place the right manner in which to mitigate those risks. For retail and client asset risks in the UK, the FCA has identified the following. It says, these are good mitigants, good governance for the UK branch, good systems and controls for the UK, which ensure appropriate levels of protection for policyholders, processes to ensure that the products and services are suitable. So that's your product governance. Are they working? So if you're creating products in Europe that you're intending to also then distribute in the UK, how are you ensuring that those products meet the needs of customers in the UK? How are you making sure that those products have been further developed from what you might sell in France or Germany or somewhere else and suitable for this market? Localization of compliance and other policies. It's a big tick. If your legal entity, say based in Spain, has a financial crime policy, make sure that financial crime policy meets the needs of the UK legal environment, okay? Because there are very specific UK laws around financial crime, such as the Bribery Act. You need to make sure it's not just financial crime, your other compliance policies, your conduct risk, your treating customer fairly policies. They all need to be localized, or you need to check that they match what is required for here. And of course, I haven't covered the PRA here, but the biggest one for the PRA is, do you have the right capital? Okay, they're always going to be looking at, are you viable and do you have the right capital? And they will, they have minimum requirements for maintaining capital in the UK. And of course, you have to make sure ultimately that you're going to meet their other requirements around technical provisions and what are currently Solvency II requirements. All right, let's look at some of the things that they will look at. Sorry for this, but I'm going to do this because it's probably easier. These are the base position. These are the key parts of what the FCA and the PRA will look at. They will look at them differently. So for example, with capital and capital structure, insurers have Solvency II, they've got to comply with Solvency II. Even in the UK, the rules are still Solvency II based. For brokers, there are different solvency requirements. The UK FCA solvency requirements do not necessarily match the solvency requirements that you have in Spain or Germany or wherever it may be for intermediaries. And there will be that conflict. And that's what we were talking about earlier. What is it that the FCA and the PRA need to do to make sure that the branch that you're operating here is going to protect policyholders in the financial markets? Are they going to be satisfied with the capital position that your legal entity has? Or are they going to require you to do something else the way that the PRA does with requiring onshore capital? All of these, so your governance structure, your operating model, your risk framework, management and decision-making process, all of these are going to be looked at from the point of view of your legal entity, because it is the legal entity that is applying for authorization. However, what the FCA and PRA are then going to do is going to want to see from you in your regulatory business plan what's called the scheme of operations. And the scheme of operations is going to set out how the branch is going to be managed and how each of these key pieces from the legal entity also either are in the branch, depending on your size, or are overseeing the branch and fully linked into the way that the branch is operating. So your risk framework in Spain or Germany, it will be intense, I should think, if you're an insurer. It's going to have to meet Solvency II requirements. For the branch, how does within that risk framework, what controls are there for how the risk framework operates in the branch? Or are you going to have, if you're large enough, a completely separate risk framework? Okay, the same applies to the governance model. You will have a governance model for your branch. How does that link into, how do the individuals who are in that part of that governance model, whether they're the head of the branch, how do they report into the legal entity? Where is the decision-making taking place? What is the operating model? Are you going to have different IT in the UK? Are you using the IT in Spain or Germany or Malta or Ireland? And if so, your application, because again, it is an authorized application for the firm itself, you have to go into some detail about what your operating model is, what your target operating model is, what your IT arrangements are, how you create your products, how you oversee your products. All of that is legal entity and branch. Okay. And of course, there is something called the threshold conditions. When the PRA and FCA are looking at all of these things, they are looking at them in order that you meet threshold conditions. Now, we have in the appendix, we have a summary of the threshold conditions for the FCA and the PRA. If you don't meet those threshold conditions, you simply will not get authorization. It's as simple as that. That's why they're called threshold conditions. And if you get authorization and you then fail to keep meeting threshold conditions, you are likely to lose your authorization. So it's key that you understand that they are there, they are called threshold conditions, and all of these things will play into how you meet those threshold conditions. One of which, for example, is that you control your business properly, which is why you have the oversight on governance and management and decision-making, risk framework and the like. Okay, all right. What's next? Another poll question. Let's have that, please. Okay, how long do you expect the application to take? All right. We've done a few of these. We have a fair idea of how long they take. Well, that's interesting. I'd say there's a few honest people here and a few people who are ambitious. How are we getting on? We'll give a little bit longer. Got a few people who haven't answered. 10 more seconds. 5. Okay, Ben, let's share, please. There you go. All right, so the ones I think are honest are the ones who say they don't know. Because I think if you ask me now, I would probably say I don't know. All right. 6 months, I think, is ambitious, unless you're an intermediary and you know that the FCA is supposed to complete the application within 6 months. But that's not building in how long it takes to put all of the documentation together. On average, our clients take 6 months. Some have taken 9 months to put their applications together. So you need to build that in. 12 months, I think, is closer to the mark, but equally, it's not clear at the moment. So we have a client who has put an application into the FCA. It's not a Brexit related application. It's a new firm. The application went in November, or was it December? I'm not sure. They still haven't had a single response from the FCA. The FCA is absolutely inundated at the moment. It's only just got a brand new head of authorisations department, and they are facing an avalanche of applications. So they are supposed to deal with them in 6 months. I'm not sure that that's going to be easy. Insurers, I think, 6 months is out of the question to get authorisation. Absolutely out of the question if you're an insurer. We have an insurer who applied Q3 last year, still haven't got their authorisation, still battering their head against the door. And I think that, they've just brought in SMCR, they've brought in a whole new raft of rules around protecting, the policyholders and protecting the market as a result of 2008 financial crisis. All of those rules are still playing out, and they are having to look at what they do and what their policy should be on firms which have been trading here for years under the freedom of service and right of establishment, and they're now having to put together a policy about how they deal with those. But they also now need to do something about staffing their authorisation department, I would say. Right, let's get rid of that. How are we going for time? Cool. Okay, so you put your application in. Formally goes in. For larger firms, in fact, even medium-sized firms, we strongly recommend that you talk to the FCA and PRA beforehand. For some firms, they have provided a presentation of who the firm is. So it's a sort of pre-application process where you say, this is us, we are in the TPR, and here is a brief, summary of what our firm does and what we're hoping to do. And that will just start that process of having a connection with the regulator. And it's important that you do connect with the regulator during an application process, that you have somebody, a case handler that you can work with. So starting early and contacting them. We have a series of people that we know there that we often call on behalf of clients and say, we've got a client who wants to bring in an application. This is who they are. We'll provide you with a presentation. And it's a summary of the firm. It's not a formal application. It's just a summary of what the firm is, what it looks like, how big it is, what products it does, what its strategy is, where it's going. And it just starts that process of discussion with the regulators. And it sort of helps to get you through. Anyway, let's move on. So in goes your application. There will be an initial assessment. The FCA, the PRA, they will look at it and they say, complete, incomplete. It's very, very rare that they will say that's a complete application because they won't, at that point, start to dig in. But what they will do, you can be absolutely guaranteed that they're going to ask you questions, okay? And those questions are going to often be intrusive. You'd be quite surprised by some of the questions that will get asked about individuals, for example, or about financial crime controls is high on the list at the moment as well. And it's very important that you're able to give them a detailed response. You should also expect, in many cases, that when you have answered the question, there may be more questions. This is an iterative process. So we have firms that have put in applications with all of the documentation, and they have had to change their application. They've had to change some of their governance structures because it wasn't accepted. You know, it is an iterative process and it can take some time. The sources of information that will be used by the regulators, market intelligence. So you're almost guaranteed, depending on size, I think, that the regulators are going to contact your home state regulator. The Spanish regulators, the Maltese regulators, the Irish, the Bank of Ireland, they will contact them. The regulators in Brussels, they're going to contact them and ask them about your firm. They're also going to look very, very closely at everything you have. And they have their own intelligence. So, for example, it won't surprise you that they will look at your firm in Glassdoor to see, you know, they're looking for indicators of culture of your firm. They will also Google all of the individuals. They may even Google members of the family because they want to know who the controllers are. They want to know who is governing the firm. They want to know who the controllers are. They are going to look very closely at these things because they want to know who it is that they are actually going to be governing. And we have seen occasions where the answers they weren't very happy with. And you know, some of the firms have been quite surprised by the questions that have been asked because they are very particular and they've done their degree of intelligence. They've done their work on looking at the firm. What you have to be able to do, you have to be able to show that you are ready to be regulated. Now, that doesn't mean that your branch has to be operating the way that you want it to be. But you have to show them that you have a plan to get it to where it needs to be. So your application can be slightly prospective. The more prospective it is, the more difficult it will be for you. So you want to come at it from the point of view of this is the plan, this is the branch we're going to operate, and this is how much of it's operating at the moment. And here is a proper detailed plan of how we are going to get the right resources or the right IT or whatever it is that isn't operating at the moment. Willingness to be regulated. This is actually one of the very strong and very important dynamics. If you are given a hint that something in your application is not right, you can argue it if you want, but that's not showing your willingness to be regulated. Okay? And it is as simple as that. It is a dynamic that we commonly see. The PRA or the FCA will say, well, we're not quite sure about that Ned. They're not going to tell you have to remove him, but you know, you might want to think about whether that Ned is going to stay and is the right person, okay? Particularly if you're putting an application together and actually they're not appointed yet. You might think, okay, we've got the hint, we understand that. We'll find a Ned who is more suitable. Talking of Neds, for example, you may want to think about if you need Neds, you may want to think about using UK individuals because it will make it easier if you're having a branch which has a Ned on it, depending obviously on size. What else might they do? That's sort of it. Organized, again, I said, you know, willingness to be, sorry, not willingness, ready to be regulated. If you're not, then organization is a key thing, okay? We have a plan, we know what we're doing, okay? It's all about mitigation of risk, showing the PRA, the FCA, that you are organized and you really are on top of what you need to be doing. And again, finally, you absolutely have to demonstrate that you meet those threshold conditions. So you have the capital, you have the right organization, you have the right controls in place to mitigate all of the risks. All right, so finally, I think, finally, yes, finally. All right. Application's gone through, you've answered all the questions, you've provided all the additional documentation they've asked. Ultimately, they have to make a decision and they will have a panel of people who make the decision. You don't get to hear who they are, you don't get to know what the process is, but a document is put together and it is provided as a report to a panel of individuals who will consider the application. The choices are approval with limitations, and refusal. Now, refusal does happen. Not all the time, but it can happen. The regulators, I think in this circumstance with Brexit, the regulators are not going to want to refuse if they can help it, okay? But they are actually going to try and help you through the process. They want little disruption, and they also recognise that by failing to allow firms into the UK could have a long-term detrimental impact on the UK and financial services in the UK. So it is important to them to have firms being approved. It's important to the government to have firms being approved, but you still have to get past the threshold conditions. You still have to prove to them that you are a low risk to their objectives. And they do that by using limitations and restrictions. Restrictions on regulatory activities. They may be prepared to let you sell on a non-advised basis, but not on an advised basis. They may actually decide that they're not going to let you, if you know, for example, if you're an MGA, they may say, actually, we're not going to let you write risks. We'll let you distribute products like a broker, but that would be extremely damaging. If you don't have the right underwriting controls, you would expect to hear from them and say, we're concerned about your underwriting controls. Fix them, right? Because you don't want a restriction of that nature. There may be restrictions on size of business. Premium income is not as uncommon as you might think. There may be restrictions on the nature of business or products. They may decide that you're not ready to be distributing certain products in this country. So they may know that you're a professional indemnity specialist and all of a sudden you're wanting to offer construction bonds. Well, guess what, right? They may not be prepared to do that. They may also decide that you pose a risk to the UK. So if your entire business model is that you are going to run your branch out of Spain and you will only have the most limited number of people, brokers or underwriters or whatever the case may be in the UK, they may think, okay, you want to have a Spanish control environment, that's fine, but that presents a risk to us. We aren't going to let you write any business in the UK, or we aren't going to let you distribute any business to UK policyholders. So they may actually say, guess what? You know, we're not happy with your control environment. We're happy for you to bring EU risks in. We're happy that you know what you're doing with those EU risks, but we're not going to let you deal with UK policyholders. And then capital. I mean, capital is the one most commonly used by the PRA. They may decide that you do pose a risk, that the local regulator where you operate, their approach to Solvency II isn't the same as the UK. So they may say, okay, so your branch, you are actually going to have, if you're an insurer, you're going to have capital in this country anyway. There are minimum capital requirements, and that capital will have to be retained here for the branch. They may decide that they want to increase that requirement. So that is it. We're going to move on to questions. Ben, what have we got?
Hi, Kenneth. I've got 3 questions for you so far. The first question, I'm going right back to the beginning of the presentation.
Oh.
At the start, Kenneth mentioned the firm and not the branch is the one applying. How does this work if this is a UK subsidiary, or is it the same?
So if it's a subsidiary of a company overseas, so if it's a group, it's a group company and it is a subsidiary, then it's not a branch. And all of the issues that we've covered relating to the risk of that firm will relate solely to that subsidiary, unless there are market risk issues. So if you were, for example, the UK subsidiary of AIG, if you were wanting to bring in a new insurance entity here, then they're going to look at the capital of the group. They're going to ask questions about the group itself anyway, but not to the extent that they will be looking at that subsidiary. Okay, so they just want to know where the subsidiary fits within the group. They will want to know about group turnover, about you know, if you're an insurer, your rating, et cetera, et cetera. So there is an element of group involvement, but they will primarily be focused on the legal entity in the UK.
Thank you. Next question for you, Kenneth, and it's relating to the application process with the FCA and PRA.
Yep.
Should we simply expect the TPR period to be extended if the FCA and PRA can't get through the backlog of applications? Surely it is in the gift of the UK.
Yes is the answer to that. I would have thought that that would be the case. I think they would be very disappointed if firms that are given landing slots don't hit those landing slots. So if you have a landing slot for March next year and you're an insurer, you should be on top of your application. You should have started it. You should be working on it already, because it does take, you know, 9 months, I think, to get probably all of the documentation ready. If you're a smaller firm, you know, the hint is get on with it now. Don't wait until 6 months before the end of the TPR. I think there will be a level of disappointment if firms haven't, you know, done that. But equally, as I said, there is a wish from the UK government to maintain, you know, the London market as, you know, a key world force in insurance. But I guess the answer is don't push your luck, you know, because there's no guarantee.
Thank you. I've only got one more question for you at the moment, Kenneth. The last question I've got came at the end in the assessment process, and it's also to do with timing. Question on landing slots for firms in the TPR, please. How long is the landing slot from opening to closing date? That
depends on what they tell you. So if somebody says your landing slot is March next year, they may say 14th of March. Now that probably means you need to get your application in by then. And there's no, I mean, you know, the dynamic again is you should probably be talking to them well before that anyway. So you want to start the process. You have a landing slot, say 14th March next year, you know, provide them with a pack of information, a draft of your application or a draft of your regulatory plan in December, right? Give them something to look at, to think about, you know, early on so that you can get some feedback early. You know, because once the application goes in, you're into the process, and you are better off trying at least to build a relationship with the people that you're going to be dealing with for 6 or 9 months as they go through your application and make your life well, not hell, but certainly, you know, keep you busy. While we're talking, I'm just going to flick through. There are the I think that one's the PRA threshold conditions, FCA, and then here is what I've done for everybody, which is the approach to regulatory plan. And as you can see, we've sort of commented on, you know, what should be covered under each of these sections to try and help. Okay, any more questions, or are we done?
That's all the questions we've got, thank you.
All right, so we will, as I said, we will have this recording up on our website at some stage. The slides will be available with the appendices, and we are going to shortly circulate just a quick feedback. So if you could provide us with some feedback on what we've done today, let us know if there's any other things that you would like us to cover in the future, please do so. And of course, if we can help you with your application, please get in contact. We'd be very happy to help. Okay, so everybody, thank you very much. Have a good day.